He bought his first stock at age 11. He filed his first tax return at age 13. And for a better part of a century, he taught the world that integrity is a compounding asset. Today, we mark the end of an era. The Oracle of Omaha, Warren Buffett, has officially hung up his boots. I'm Neeraj Shah, one of the countless Warren Buffett disciples, and this is a special tribute to the Oracle of Omaha, an ode to Warren Buffett. You know, I think about it sometimes. What is it that Warren truly did to impact my life? Not much would be the first and maybe the obvious answer, sitting 1,000 miles away from him in India and so many years younger to him. But the part about great thinkers and doers, like Warren Buffett truly is, they leave legacies and thoughts which influence your life in more ways than one, in multiple ways. I had only one Berkshire B share, and I could not think of investing in US railroad companies or insurance companies that Berkshire Hathaway was a part of. Nor could I pop peanut brittles or guzzle cherry coke the way Buffett does. Yet, I watched all of the Berkshire Hathaway AGM telecasts with rapt attention, made copious notes, and traveled all the way to Omaha more than once to just be in the same room as the great man. And despite all the hours spent to reach there, the less than 3 hours of time spent in that auditorium as Warren Buffett and Charlie Munger sat in made it all worth it. The learnings and the wisdom that both Warren and Charlie espoused in those 3 hours are things that investors can't get anywhere else, truly. In some sense, the next 20 minutes are my personal homage to the greatest investor in the world, whose teachings will stay on well beyond his tenure in the current life. It is perhaps the greatest irony of modern capitalism that the richest man on Wall Street never actually lived on Wall Street. Warren Buffett built an empire not through high-frequency trading or complex derivatives, but through patience, rationality, and a radical belief in value. From the textile mills of New England to the railroads that crisscross America, Berkshire Hathaway was never just a holding company. It was a canvas. Buffett didn't just buy stocks, he bought businesses he understood. He famously avoided the dot-com bubble because he didn't understand the tech, only to become Apple's biggest fan decades later, when he saw it not as a tech play, but as a consumer staple. His philosophy was simple. Rule number 1, never lose money. Rule number 2, never forget rule number 1. But his legacy isn't just the billions. It's the annual pilgrimage to Omaha, the Woodstock for capitalists, where tens of thousands gathered, not just for investment tips, but for moral clarity. He, along with Charlie Munger, showed us that you could be ruthlessly capitalistic and ethically sound at the same time. He pledged 99% of his wealth to philanthropy, setting a new standard for what it means to be a billionaire. That was a journey of a lifetime. But to understand the method behind the magic that Warren Buffett created, we need to look at the philosophy that powered it. Buffett didn't just change portfolios. He changed how we think about value. And it is this that has led to countless investors like me getting influenced by reading his works, listening to his interviews, talking to people about him, and as I said, traveling all the way to Omaha to be in the same room as the great man himself. Now, let's talk about the wisdom of the Oracle, right? Warren Buffett's letters to shareholders are considered sacred texts in the finance world. Let's look at 3 quotes that, to my mind, defined his investing career. The first learning, the first quote, "Be fearful when others are greedy, and greedy when others are fearful." The ultimate contrarian mantra, isn't it? He lived this in 2008, injecting billions into Goldman Sachs and GE when the world was falling apart. The quote number 2, or the learning number 2, price is what you pay, value is what you get. So many Indian investors would have heard Ramdev Agarwal speak about it, right? It's a distinction that many traders forget. Buffett, however, taught us to look at the intrinsic worth of a business, not just the ticker tape and not just the price that flashes on our screens when we look at a stock or a business. And finally, one of his most profound pieces of wisdom: it takes 20 years to build a reputation and 5 minutes to ruin it. In an era of corporate scandals, Buffett's premium was trust. He famously told managers that they could lose money, but not a shred of reputation. In fact, in 2011, the legendary investor Warren Buffett made his maiden visit to India. He met then Prime Minister Manmohan Singh. He also sat down for a candid interview with NDTV, which once again offered a glimpse to his extraordinary mind and the thoughts and philosophies that have made him a legend. Listen into some of the highlights from that interview.
To be a great investor, you don't have to have a terrific IQ. You know, if you've got 160 IQ, sell 30 points to somebody else, because you won't need it in investing. What you do need is the right temperament. You need to be able to detach yourself from the views of others. I haven't bought or sold a share for 40 years. So somebody said, when's a good time to sell Berkshire? I said, I don't know. I've never sold any. The only time I'm interested in the price of a stock is when I'm either buying or selling it. And if we're buying one stock right now, I hope it goes down, obviously, because I've got billions of dollars worth of left to buy. Right. And most people like their stocks to go up. I like our stocks to go down because I form my own independent judgment of what they're worth, and the cheaper they are, the better it is from our standpoint. I won what I call the ovarian lottery, very early on. Yeah, that's what it is. It's an ovarian lottery. I mean, just before you emerge, you get this ticket, and it may say black, it may say white, it may say male, female, it may say smart, dumb, whatever it may be. Nothing to do with, my qualities or, anything else. And I got very, very, very lucky.
Charming and informative, isn't it? Well, it's not just what he said in public platforms, right? Sometimes you just read what Warren Buffett has said or what Charlie Munger has said, and you learn so much from it. I have learned tremendously when all through these last maybe 9 or 10 years that I've followed the two of them so well. And these are lessons that will stay with me through life. My top learnings from the deadly duo: first one, invert, always invert. And you often hear this or think about this and think of what it means, that success often comes from eliminating the big mistakes: fear, greed, envy, poor incentives, rather than chasing genius moves. So as long as you're not making mistakes, you will do well. And therefore, instead of trying to reach the pinnacle, invert and avoid the mistakes, and that will hold you well. Another thing that I now do quite a lot, in fact, the last 8-9 years, which is read voraciously and commit to a lifetime of learning, and it will serve you well. And third, something that was more a Munger trait, but you hear the two of them talk about it so much, which is that build a lattice work of mental models from multiple disciplines. It's, like I said, it's Charlie Munger's core idea, which is that master big ideas from psychology, economics, physics, biology, and more. Then interconnect them. So make a grid of sorts, right? Because this approach leads to better decisions and worldly wisdom. To me, these were some of the biggest learnings that I got from both Warren Buffett and Charlie Munger. Who, you might ask, is Charlie Munger? I mean, no description or homage to Warren Buffett would be complete without a mention of Charlie. Charlie Munger was a brilliant American investor, lawyer, philanthropist, and vice chairman of Berkshire Hathaway, serving as Warren Buffett's indispensable partner for over 4 decades until his death in 2023 at the age of 99. His investing genius lay in pioneering a multidisciplinary approach to decision-making, drawing mental models from psychology, economics, history, and other fields to avoid cognitive biases and focus on high-quality businesses with durable moats. Munger's profound influence shifted Warren Buffett himself from bargain hunting to buying wonderful companies at fair prices, emphasizing inversion something that I spoke about just earlier. It is not just retail investors like me who worship him. The titans of industry have always bowed to the oracle. Bill Gates once said that Warren inspired us to tackle the toughest problems in the same way he tackled investing, by looking for the most effective solutions. In India, Rakesh Jhunjhunwala, the big bull, often called Buffett his role model, citing his patience as the ultimate skill to master. And Ramdev Agrawal, who has attended almost all of the Berkshire Hathaway AGMs in recent times, simply advocates to everybody to read about Buffett and apply his principles to investing, even in the Indian context. Prem Vatsa, often called the Canadian Warren Buffett, simply said that Warren is the Mozart of business. He has no equal. Simply speaking, you can't contradict this. To decode the Buffett legacy, I'm now joined by Rajiv Thakkar, someone who has applied Warren Buffett's tenets to the Indian markets successfully. Welcome to the show, Rajiv. And I want to start off, Rajiv, with the Munger factor, because we can't talk about Warren without talking about Charlie Munger, right? How crucial do you think that partnership was in moving Warren Buffett from buying cigar butts, which is the cheap and bad companies, to buying wonderful businesses at fair prices?
So in the structure that Buffett and Munger ran, which earlier the partnership and later on Berkshire Hathaway, there they would pay taxes on transactions. So every time they bought and sold something, they would end up paying the capital gains tax or whatever taxes applied. Now, that is inefficient in terms of compounding. There's leakages all along. So when one moves to the great businesses at fair price and extends the holding period for long, that results in a significant bump up in the post-tax returns for the structure that they run. So this may not apply to every kind of investment vehicle out there. So some investment vehicles or some entities are tax exempt. So those people can afford in and out to some extent. But in their circumstances, I think it was very, very significant. The returns would not look anything like what they look today if Buffett had not made that shift on Munger's advice.
Rajiv, the second topic is replicability, right? Is Buffett's style replicable today? In an age of AI, algorithmic trading, can a buy and hold forever strategy still generate the kind of alpha that the great investor did himself?
So the principles definitely apply even today. The specifics may not apply. So Buffett was a great fan of investing in newspapers, for example. Now, in an era where people get their news on the internet or through social media, it may not be that great a business. But some of the things that he had said decades ago, those lessons are being learned by people all over again today. So this people talk about this lifetime value of a customer and cost of acquiring a customer and how losing money in the first year may not be a bad idea. This is spoken about long back in the context of Geico, where in the first year they would acquire a customer, they would lose money on that customer. And he was all for it, and he did not look at the reported earnings numbers for that period, but looked at the lifetime value of a customer. So that thing has been there. He spoke about newspapers, he spoke about survival of the fattest or the double-side network effect in a newspaper, where the largest newspaper has the most readers, most advertisers, can attract the best talent and all that. And we are seeing that in network businesses like ride-hailing and the like. So those principles can definitely be applied. I think the buy and hold forever, he's spoken about that in aspirational terms. So if nothing needs to be done, don't unnecessarily churn the portfolio. But in his own investments, there have been occasions where he has had reason to exit positions, sometimes very, very quickly, and sometimes when valuations became excessive. So I think that's an aspirational part. I don't think one needs to take that very, very literally in one's investment decisions.
Okay, Rajiv, I want to draw your attention to the India context, right? Because you can argue that Warren Buffett missed the India growth story largely. I mean, it didn't show up in his returns, but he was not present in India. Do you think that his principles work as well in a high growth, slightly more volatile market like India versus what they have done in other markets that he's invested in?
So Buffett himself was asked about global investing. So his thing is, he invests in companies which are listed in the US but have businesses all over the world. So, for example, he mentioned Coca-Cola, where Coca-Cola has operations all over the world, and it does not just derive its revenue from the US markets. Again, Apple was one of his big investments, which again benefits from global growth. So if one looks at investment returns, US and India have been standout markets in that sense, and sometimes US does better, sometimes India does better, but both have delivered strong returns in dollar terms. The principles obviously apply in India. So Buffett is, of course, a celebrated investor in the US, and he bought things like Moody's. And in India, a celebrated investor like Rakesh Jhunjhunwala, apart from other investments like Titan, is also known for his big investment in CRISIL. So principles remain the same, like Borsheims in the US versus a Tanishq in India. So those kind of things replicate across borders. I don't think principles change when markets change.
Rajiv, what would Warren Buffett's exit mean for Berkshire Hathaway, for the world of investing, and for life in general?
So I think what his exit means is Berkshire is now a conglomerate like any other. And despite his preparing for the exit for many decades and creating a succession plan and getting a set of able managers, without him around, I think that premium associated with him goes away, and like he would be the first port of call at the time of any financial crisis, or whenever people needed some guidance, or if he invested in something, people would see that as a sign of stability. I think those things go away. So if you read books around the global financial crisis and how he invested in preferred stocks of certain financial companies, and that gave this perception of everything is not as bad as it looks. I think that kind of capability cannot be replicated by someone else.
Can't let you go, Rajiv, without talking about your favorite Warren Buffett memory. It could be something that you've enjoyed with him. It could have been something that you've enjoyed by listening to him or going to the AGMs that I have done, whatever it is.
This is a personal one, nothing to do with investing. So 2011 is when this happened. So 2011 was when I was attending the Berkshire AGM, and that was the first year where Buffett said he will, on the next day of the meeting, be at the Borsheim's store, and he will be selling jewelry over there. So a lot of people go for the AGM and leave immediately after the AGM. I went to Borsheim's on the Sunday after the meeting, and that was the first year, and although crowds definitely were there, but it was not as crowded. And being the first year, they hadn't figured out that freeloaders like me also will end up visiting the store, people who will probably not end up buying jewelry. But one could walk up to him, and I got clicked in the same frame as him by one of the local newspapers, and that was the front page photo on Monday morning. So that was an interesting story. That
Thanks, Rajiv, for sharing your time and your experiences around Warren Buffett. Now, Rajiv Thakkar is not the only one. We have several other investors who are paying their homage to the great man via this show. Take a look. What is your favorite Warren Buffett memory?
So many of them, but I think most important was the shaking hands with him and getting a sign done on a dollar bill. First thing, I didn't know that you take a signature on autograph on a dollar bill. That's very common in US. So I went I think in 95, 97, I went to meet him, on the eve of AGM at Berkshire. He was sitting on a chair and in a queue, we could go and get a signature, shake hands and all. So that was the most memorable one. And the first time I did, second or third trip it was. So that is the most memorable thing I have of meeting. Still, I can feel the hands of his in my hand. My hand is so small and his hand was so big. But his, that always like a child, he'll always be giggling, he'll be always laughing. And I never saw stress in his face. So always people's person, always wanted to connect with the people, and so much of enthusiasm at this age also.
What is it that you've taken from Warren Buffett and kind of molded it into your or the Indian context? Can you talk about that?
Yeah, so one of the quotes, be greedy when the world is fearful, and be fearful when the world is greedy. I think that is one thing which will be timeless in terms of the market, the opportunities in the market, and the challenges of the market. At the top of the market, you are so greedy, so confident, overconfident. At the bottom of the market, nobody believes in the market. So I think that was one thing which always keeps rhyming in my head.
But viewers, Warren Buffett wasn't all about capitalism. He was as much about the principles of life and of giving. And here's where we focus a bit on philanthropy, which is the giving pledge. Because in 2006, Warren Buffett did something unprecedented. He gave it all away. All away. Not to a foundation named after himself, but to the Gates Foundation and many others. He argued that society enabled his wealth and it belongs back to the society. He called it recycling excess claims on society's resources. There is profound advice on life as well. We obsess over his stock picks, his brilliant investing returns, but his life picks were even better. As he steps away, let's remember the advice that he gave that had nothing to do with money, but everything to do with living. So on love, something that all of us experience in our life, he says that the only measure of success is how many of the people you want to have love you actually do love you. Think about it. On career, he says, tap dance to work. And he says, and he's often said this, I have never worked a day in my life. I've just been having fun. Wouldn't all of us want to do this? And on marriage, the most important decision you make is not your investment, it is who you marry. I hope all of you who are not married thus far pay a lot of attention to this advice. Warren Buffett once said, I want to be a teacher. And he was. He taught us that compounding applies to knowledge and kindness just as much as it applies to capital. He taught us that the long run is the only run that matters. As the Oracle of Omaha retires to a quiet life of bridge games and cherry cokes, the world of finance will feel a little less steady, but infinitely wiser. Thank you, Warren, for the wealth, yes, but mostly for the wisdom. I'm Neeraj Shah, and thanks for watching our ode to the Oracle. And may all of your investments and your life compound beautifully.